Investor concerns drive BlackRock's demand for faster Coinbase withdrawals. Bitcoin ETF BlackRock Coinbase. BlackRock has amended its agreement with Coinbase, requiring Bitcoin withdrawals to be processed within hours to address investor concerns over security and transparency in its ETF operations. Last updated September at GMT. Journalist Hassan Shittu about author Hassan, a cryptonews.com journalist with years of experience in Web3 journalism, brings deep knowledge across crypto, Web3 gaming, NFTs, and play-to-earn sectors. His work has appeared in Author Profile, Share Copied, last updated September at GMT. Why Trust Cryptonews with over a decade of crypto coverage. Cryptonews delivers authoritative insights you can rely on. Our veteran team of journalists and analysts combines in-depth market knowledge with hands-on testing of blockchain technologies. We maintain strict editorial standards, ensuring factual accuracy and impartial reporting on both established cryptocurrencies and emerging projects. Our long-standing presence in the industry and commitment to quality journalism make Cryptonews a trusted source in the dynamic world of digital assets. Read more about Cryptonews in response to mounting investor concerns over the security and transparency of Bitcoin exchange-traded funds ETFs. BlackRock has amended its agreement with Coinbase, demanding that the crypto custodian process Bitcoin withdrawals within 12 hours. This move comes as the world's largest asset manager attempts to address fears over Coinbase's on-chain settlement practices. It focuses particularly on proof of reserve transparency. BlackRock amends for faster Coinbase withdrawals. What is going on? On September, BlackRock filed an amendment to the Securities and Exchange Commission, SEC, outlining new terms for Bitcoin withdrawals related to its ETF products. The amendment mandates that Coinbase, the custodian for BlackRock's ETF assets, process Bitcoin withdrawals to a public blockchain address within 12 hours of receiving instructions from clients or authorized representatives. The goal is to reassure investors that their assets are being appropriately managed and that there is no undue delay in accessing Bitcoin holdings. In the filing, BlackRock emphasized, subject to confirmation of the foregoing required minimum balance, Coinbase custody shall process a withdrawal of digital assets from the custodial account to a public blockchain address within 12 hours of obtaining an instruction from client or client's authorized representatives. Investor concerns: is Coinbase transparent? The demand for increased transparency and faster withdrawals was catalyzed by widespread speculation that Coinbase was potentially purchasing paper BTC or Bitcoin IOUs on behalf of Bitcoin ETF issuers. This rumor, combined with Bitcoin's stagnating price over the past 3 months, led many investors to question the integrity of the Bitcoin ETF system and Coinbase's role as the primary custodian for these products. In August, investor worries were further fueled when Coinbase announced the development of a new wrapped Bitcoin, WBTC, dubbed Coinbase BTC, CBBTC. Some feared it could be linked to a system of IOUs rather than actual Bitcoin. Responding to these concerns, Coinbase CEO Brian Armstrong took to social media to address the accusations. In a September 14 post on X, Armstrong wrote, "This is what it looks like if you want a bunch of institutional money to flow into Bitcoin." Armstrong's statement clarified that all ETF transactions are ultimately settled on-chain. However, Coinbase has refrained from publicly sharing all ETF wallet addresses due to confidentiality agreements with institutional clients. He reassured investors that Coinbase undergoes regular audits and operates transparently within the regulatory framework expected of a publicly traded company. According to Dune Analytics, BlackRock's iShares Bitcoin Trust IBIT had captured over 38% of the total Bitcoin ETF market, with over $22.5 billion in on-chain holdings. Collectively, Bitcoin ETFs have accumulated more than $1 billion in assets, showing the growing demand for institutional Bitcoin products. In a September 15 post, Eric Balchunas, a Bloomberg senior ETF analyst, also dismissed the theory that Bitcoin's recent price slump was linked to ETF activity, instead pointing to native Bitcoin holders as the primary sellers. He stated, "All the ETFs and BlackRock have done is save BTC's price from the abyss repeatedly. The introduction of ETFs has brought significant institutional inflows into the Bitcoin market, accounting for 75% of new investments in early 2024. However, the increased attention from large asset managers like BlackRock has also resulted in heightened scrutiny from investors demanding greater transparency and assurance that their investments are secure. Follow us on Google News.